Hey everyone, welcome back. Okay, so this is a different format, and for the next few videos, I think this will be our format because just a quick update. So after my hiking trip, which I was very, very excited about, I actually on the way back um, got COVID. And I have been quarantining in the house in a room, and I didn't want to kind of, go out because my studio is in the other part of the house, and I didn't want to get out of the house or get out of the room because of my kids' family. Of course, my dad is 80 years old and he lives with me, so I didn't want to really even go close to the proximity. And that's why I'm just in the room, and I decided to kind of do a quick video here on the market conditions. Some of you have asked that, hey, you haven't released any videos yet. So I actually alerted my Discord member yesterday about my condition. So today is day 3. I should be okay in the next 2 to 3 days. I'm actually taking the new COVID pill. My doctor actually was able to prescribe. So I'm taking that. It's disgusting. The mouth taste just goes crazy after taking it. I've never experienced anything like that. But the hope is that I will get better sooner. Okay, so let's come to the point here. So we are going to be talking about the market condition and inflation. And is inflation here? Are the red days behind us? Are the red days in front of us? Or the green that we are seeing in the market, is it going to last for a long time? So we'll answer all those questions, and we'll, of course, have all the data in front of us to answer those questions. And I'm sure most of you are tired of these market fluctuations. One day the market is nothing but green, but then the next day all you see is red. There is nothing anyone can do about it. And if you have been in the market, then you can absolutely make money in these market conditions. But for most of us, that is either too big of a pill to swallow, or we are just not in that game of shorting the stock or doing some crazy things to make money in the downturn. So the reason why I wanted to make this video is this. While the whole market sentiment is negative, as looks like we have seen the worst, but the numbers are pointing in a different direction. Let me know in the comments what are you observing in the market and how you are planning to hedge your portfolio. I'll show you some data that shows that consumer is still spending money, but the shift that is taking place is strange and pointing that we have not yet seen the worst. So let's get into the data. But before that, please do me a favor and hit the like button and also consider subscribing for more market updates. Okay, so let's start with February of 2022. So this is February of 2022, 56.7, and June of 2021, 51.4. So as you can see, the credit card usage is going up or has gone up in the last 6 months or 7 months now, almost since this study was published or this data was collected. And we can see this is American Express, this is Discover, this is Capital One Portfolio Stat. So everything is pointing in the direction that consumer is really strong and the consumer is still spending money, which is, of course, all a great sign, right? Consumer is strong, spending money, everything is good. Okay, but there is a huge shift that's taking place. Now, let me show you a data which kind of relates to this. So even though we are seeing strong credit card use right here, because people are spending money. Look, in October of 2021, 53.7, but in January of 2022, 58.2, in February of 2022, 56.1. So with all this that's going on, we can see that the data is, of course, still going on. The spending is still on. That means people are still spending money, still using the credit cards. If I take you to a different data right here, this is the data that talks about the US dollar volume growth year over year. As you can see, credit card 25.9 in March of 2022. In June of 2021, it was 31.9. So even though it has come down from June of 2021, but it has been down to 22.5, 25.7 in August and September of 2021. Since that time, sorry, since that time, the credit card has come up. If you really pay attention over here, yeah, of course, it's not same as February of 2022. Since then, it has come down, but you can see that credit card is still strong. But look what's going on in PIN debit. PIN debit has been the weakest since June of 2021. June of 2021 was 9.5, and PIN debit now in March of 2022 is negative 8.4. That means people do not have cash in their bank accounts. They are using more credit card to fund their travel, their tourism, but they are not using their debit card. So you can see the reason why they are not using their debit card is because they do not have much cash in their account and they want to use their credit, they want to preserve their cash because they don't know what to expect in the next few months. Same thing is going US transaction growth year over year. You can see the growth year over year has been in 14 to 12 to 15 range, and then all of a sudden it dropped to 5.8 in March of 2022. The credit is 20.6, the PIN debit is negative 9.0. So you see the range or the metrics that we are seeing over here is not making sense. Why are people more spending more money when they don't have much money in the bank account? And this is the main worry. But let me show you another data that relates to this. This is dollar volume growth. Look at this. This is total overall growth across all industries. June of 2021, 21.5. In March of 2022, 10.5. Almost half. So the growth among many industries are slowing down almost to a negative. Look over here, women accessories, children and infants wear stores, family clothing stores, everything is in negative. And look, it was booming back in August of 2021, July of 2021, all the way to October of 2021. It was not even the Christmas time because this is okay. This is this holiday, inflated numbers. I'm not paying attention to that. But look over here. It was booming at that time. But now it is slowing down and it's a negative. Transaction growth, look at this, almost third of what it was before, close to that. I mean, total retail growth is negative. Everything is going down, but consumers are still spending money on credit cards. So what does that tell us? That tells us that consumer is dying to get out, and they're spending money in travel, tourism, and whatever they can to kind of on those plays, on kind of more of the reopening things. But what's going to happen once they're done with that? Once they're done, they are going to realize that they have to pay all of this debt back. That means they're going to cut back in many other expenses that even though that this is negative, but I think they're going to kind of go over and spend even less in these categories over here. And that's when we will see earnings come out, and earnings will not look good. And then we are going to see a major, I would say, drawback in terms of people spending. And if credit card slows down, and now we know that the debit card has already slowed down, the economy is going to slow down. I mean, we just got the report this morning that the US economy has slowed down as compared to year over year. So this is all indication of what's coming ahead of us. So I really don't think we are out of the fire yet. I think we are going to see some major market correction in the coming days, but that is not going to happen very soon because again, right now the economy is still looking strong. So how do you play this? This is what I'm doing. I am basically selling covered calls on a major green day, and also the stock that have given me good profit, I'm getting out of them and taking profits. And on a major red day, I'm playing for good companies that I know has a long-term potential. I bought some Tesla stock. I alerted the members just a few days ago. And I played some Facebook puts that didn't pan out well because I was expecting Facebook to report bad earnings based on Google because Google slowed down or the ad sales slowed down. But I thought the same thing is going to happen with Facebook, but nope, it didn't happen. Facebook actually reported stronger user growth, even though the other numbers were down, but they reported strong user growth, and Wall Street really loved it because that's kind of forward looking. So they're saying, okay, their next quarter is going to be good. And I bought puts on the close or the market close. I was up almost 30%. And again, I didn't follow the principle and I just carried on. I'm saying, you know what? The Facebook is going to have a bad earning. I'm just going to continue with it. And I'm going to continue holding it. I should have taken the profit. Again, if you follow your principle, you will likely not to lose much money. But again, I kind of played it and now I'm down. And I'm going to actually cover that loss by selling some covered calls on my positions. So let me know in the comments, what do you think? Are we done with this crazy market movement, or you think we're just getting started? Please let me know your thoughts in the comments. Also, make sure to take advantage of free stock of Moomoo. And if you like to chat with like-minded individuals, then consider joining our Discord and Patreon. We'll be doing some major Discord overhaul for all those who have already joined the top tier. They will be grandfathered into the plan. And more info to come on that later. Thank you for watching and being here. And until next time, you all have a sparkling day.